All right, guys, let's get straight into it. If you've been watching my last few videos, the market right now should not be catching you off guard. And this is exactly why most traders are getting chopped up right now because they're reacting instead of actually understanding what the market is doing. If you look at IWM and XPX, this is playing out almost exactly how we mapped it. So, in this kind of environment, you just can't chase moves. You have to stay focused on levels, stay selective, and only take clean setups because this market will punish you if you don't. So let's break it down. I want to start with IWM because this is what's really been setting the tone. Coming into the week, the main thing I was watching was the bounce attempt, and this just wasn't good enough. No real strength, no conviction, nothing that suggested buyers were actually stepping in. The key level I had was 245.50, if you remember in my last video. And once that level goes, that's the shift. And exactly that's what happened today. At this point, it's not a bounce anymore, it's a continuation to the downside. So now the next area I'm watching is around 230. And as long as we're trending in that direction, small caps are going to stay weak, which explains everything we've been seeing. Breakouts not sticking, momentum fading, setups failing. It all comes back to IWM not holding up. Now, even in this kind of environment, I've just been staying focused on high probability setups, not forcing trades, only taking what's clean. And because of that, we're still green on the week. This week alone, JVA, TLYS, NIX, and SIR all gave solid moves. Now switching over to SPX, because this tells you if weakness is just in small caps or broader across the market. The key level I had here was 6630, and same story. The bounce early this week just didn't have enough strength. Now we've broken below it, that's your confirmation. Once that level goes, the market usually starts looking lower. So now I'm watching 6521 and below that 6360 comes into play. If you look at the price action, there's no real strength. It's not really aggressive selling either. It's just that there's no demand. And honestly, that's worse. So let's talk about the trade of the day, which was SER, sir. This one was clean. I learned this at around $2 in pre-market and ran all the way to about 283 during regular hours. So roughly a 41% move on the day. Technically, this was exactly what you want to see. High volume breakout with tight consolidation under resistance and then clean expansion once that level broke. It also held higher lows throughout the move, which confirmed continuation. Now, even with that, I'm not overstaying it. I've taken about 75% of the position already, and I just locked it in. But the setup still looks good for continuation as long as the volume stays there. Next key level I'm watching on this is 314 plus. Now, getting into NIX, and this ties back to what I talked about around the NVIDIA GTC event. This is one of those names tied to the AI data center theme that hasn't fully hit retail attention yet. I alerted this today in pre-market at around 69 cents and it pushed all the way to about 85 in after hours. That's exactly what you want to see because when a stock can hold structure without heavy volume, it usually means more upside once the tension comes in. Technically, it's breaking into resistance right now, holding near the highs and forming a tight range. That's early momentum building. So on a higher volume day, I'm watching for a move toward 126 and then 201 plus. Now, same idea with VIA, another name in that same space. I learned this at around 65 cents in after hours today. It's starting to break out of a downtrend, form a base, and show higher lows. That's how reversals usually begin. And fundamentally, it ties into the edge AI and IoT infrastructure. Same broader theme building here. Key levels I'm watching on this are 91 first and then 129 plus. So when you zoom out, you've got IWM breaking down, SPX losing key support, and overall the market is weak. But even in a weak market, there are still opportunities if you stay selective and stick to the clean setups. These are the kind of setups I've been focused on every day this week. So until something changes, meaning IWM reclaiming 245.50, SPX getting back above 6630, you have to assume that the same environment continues, which means weaker momentum, faster failures, and discipline matters more than ever. Because in this kind of market, discipline isn't optional. It's the only thing keeping you in the game. And that's it for today's video, guys. Let's see what we can find tomorrow in pre-market, and I'll see you then.